Hello traders, welcome back to my channel. In today's video, I'm going to share with you an exciting strategy which you can use to trade the stock market. This strategy will work in Amazon. We have tested it in Amazon, we have tested it in Nevada, Microsoft, Google, all these stocks. It will work very well, and the strategy is very simple that you can easily follow it methodologically. This is a technical strategy, so you need to understand the strategy, then you follow it accordingly, and you'll be able to profit from the market. So in this strategy, we are going to be using two indicators which we have just created, and these two indicators are here on the chart. You will see the link on the description, and the link is also, you can also get this indicator from our website. So they are available. All you need is just copy the link and paste it on your browser, then you can easily add it to your chart. So these are simple indicators. Let me explain to you what these two indicators are doing. You can see here we have the first indicator is here, the Pro Trading Adaptive Trend Sniper. So what this indicator is basically doing is that is the indicator that gives us the direction of the market. So when the color of the indicator is from here, you see the color change from blue to red. So from this point, you see, if you put your cursor here, you can see that the candles are telling you that we are currently in a downtrend. So these are the features that comes with this indicator. So you see, once you are in a downtrend, you don't need to take any buy trade. So this is one thing to always keep in mind, because if you are not following the direction of the market at every given particular point in time, you will be making some wrong trade, so which will lead to losing money to the market. So you need to understand these points. First, you need to identify which direction is the market moving, because these candles you see on the chart, these represent different traders, you and everyone who is trading in the market. The decisions we are making, the emotions we are putting in the market, these are what represents here on the candlesticks. So first, identify the direction of the trend, then it will be easier for you to follow the next step of the strategy. So once you identify the direction, you know that when it's red, you are currently in a downtrend, so you can only make a sell trade decision. When the color changes to blue, you know that you are currently in an uptrend, and at that point you can only make buy decision. With that being said, the next indicator is our Pro Trading support and resistance breakout. So the support and resistance breakout has two signal features. Okay, so one is this arrow which you see on the chart. When you see this big arrow, this indicates that the buying momentum in this case at this point is very strong. So it's an opportunity for you to take a buy trade, having understand that already you are currently in an uptrend. So these levels which you see on the chart, the red is telling you that is a resistance level. So which means when price is getting to the resistance point, you should expect some level of resistance in the market, because these are dynamic resistance which are already being identified from the market based on the historic calculations being made by this indicator. So this indicator is very strong, and if you follow it, you should be able to understand how to avoid some areas which will make you to lose money from the market. So once you get this arrow telling you that is an opportunity for you to buy, this is the point at which once this candle finish, this is the point where you need to enter the trade. So from here, the moment this candle is closed, you need to enter your buy trade, because you have already identified that the trend is moving up. So once you enter your buy trade, your stop loss should be below this point. So if you are somebody who is a swing trader, some traders will want to put their stop loss below the support which was preceding the signal. But knowing that you have this line of margin between these points, these two areas are also good for you to place your stop loss. But for the strategy, we are taking our stop slightly below the arrow, so that if we are wrong in a trade, because not every trade you are going to win, in some trade you are going to lose. That is how the market plays out. Trading is a game of probability, so no matter how the signal or the strategy or the indicator is, sometimes you are going to lose in the market. So always bear this in mind, because a lot of people tend to complain that they lose with the strategy. Every strategy, there is no strategy in the whole wide world that does not lose trade. At some point, the strategy will lose, but how you manage your trade and how you're able to follow the strategy is what makes you to be profitable from the market. So once you enter your trade at this point, your stop is slightly below the arrow, which gives you the signal, and your take profit is 1 to 1.5. So if this point you are risking 10 pips, so your take profit should be 15 pips. So this is how we trade with this strategy. So you see here, before this line, this point was previously a resistance point. This was formerly a resistance point. But once this resistance is broken, the resistance does not disappear from the chart immediately. When it's broken and it's retested, it turns that you are going to get this signal, break resistance. So it means that this resistance has been broken. This is an opportunity again for you to enter the market, because it means that this very particular point has proven to be a point of entry. So if you enter at this point, your stop also should be below this signal point, and your take profit for this, because this is a signal which you are getting when you have already opened your first signal. So once you enter this, your stop should be 1 to 1, because this you are just adding to the existing trade which you have already made. So if you enter this, if your take profit, if your stop loss from this point at which this break was confirmed, here is 10, your take profit should be 10 pips as well, because this is not your original trade. This is a trade which you are entering when you have already opened your existing trade. And your existing trade at this very, very particular resistance point, you must have closed your existing trade here. So this is just an added advantage using this strategy. So for a sell trade, you see at this very particular point, you have the color of the indicator change from blue to red. So this is the point where you identified that you have a sell opportunity in the market. So this is the point where you have a sell opportunity in the market. But at this point, you are not going to enter this trade. You need to wait for you to get a confirmed signal. And at that point, this was a former support in the market. This very particular level was a support in the market. But you see, this candle break below the support. So this support has been broken. The moment the support has been broken, the support automatically turns to resistance. Okay, you see the support color has changed from formerly it was green color, which was a support, but now it has changed to red. So this is now a resistance point. So in this case, you open your trade at this very particular point. Then your stop is at this level. So in this trade, once you enter your trade here, this is the point where you place your stop loss. Okay, here you have your stop loss, and your take profit is 1 to 1.5. Okay, so your take profit is 1:1.5. So this is the first trade which you are taking for this signal. So your take profit is 1:1.5. So if you are risking from this point here, with our example, 10 pips, so this point, your take profit should be 15 pips. So you see here, at this point, you get an opposite signal here telling you to buy. This is against the trend, so you don't take this trade. You don't take this trade because this is against the trend. You ignore this trade, and here again, you get another signal telling you to sell the market. So this is a confirmed trade, but this is a second trade which you are taking on this signal. So here, if you take this trade, here is the point where you place your stop loss. Your take profit for this particular trade, because this is the second trade, is 1 to 1. So if you are risking here 10 pips, your target should from be here 10 pips. With this area where you open the trade. In this trade, the original trade was still running, but within this region, your 1.5 must have been hit within this region. So that being said, you know that you are taking the second trade, so your take profit at this second trade is 1 to 1. So if you are risking 10 pips, you should be able to target to make 10 pips. Here again, you get another signal here, okay, telling you to sell. So you enter this trade again on this because it's confirming with the main trend. Your target, this is the point where you place your stop loss, and this is the point where you open your trade. Your stop loss is also 1 to 1. This is, you are joining this, adding this to your existing trade. So here is 1 to 1. So if you calculate the profit you must have made from this trade, you will see that it will be adding up quickly to your account. So this is how you manage your trade with this strategy. Make sure that your stop, you don't move it no matter what. Maintain your stop line, maintain the levels where you take your stop, and maintain the take profits. Don't put large take profits because trade might not get there. Based on this strategy, it doesn't require long take profits. Okay, this is a Microsoft stock. So you see here, from this point, you get a signal telling you that currently we are moving to an uptrend. But if you see in this signal, there is no any signal given based on our strategy. So if you move back, when you move back here, you will see that at this very particular point in the market, we get a signal telling us that the trend is moving from uptrend to downtrend. So this is where we get our signal, but we don't enter this trade until we get a confirmed signal. This point here is the point where we get the first signal. Here you see this was an opposite signal which you need to ignore because this is against the trend. So this will help you to filter out a lot of bad trade which ordinarily If you just follow the arrow, you will not be able to make anything from the market because you'll be getting stopped out. So here you get a confirmed signal going with the direction that we are currently in a downtrend. So once this candle is closed, you open your sell trade. Your stop loss always just slightly above this your break, so which is the point where you enter your trade. So this, once you enter this, your next point of target is 1 to 1.5. so you maintain your trade. Your target is 1 to 1.5. so here, if you are risking again 10 pips, your target should be 15 pips. So this is how you follow this. Here again, at this point, you get another signal telling you to sell, and the rest of the signals are still pointing downwards. You enter this trade at this point. Here is your stop loss, is ratio 1 to 1. So if you are risking again, if from here to here is 10 pips, so your target for this point should be 10 pips. Here at this point again, you get another signal telling you that this is an opportunity for you to sell the market. You open your trade here. Here is the point where you place your stop loss. Your target again for this point is 1 to 1. So from here you see there is no any other signal, so we just wait to see if we can get any other signal from the market. So this is a very nice opportunity, and I will advise that first try to use this on a demo account. Don't just put this on a live market. Try to experiment with it. Leave a comment in the description box below. Ask your question. If you are not clear with any part of the strategy, ask questions. We will guide you, provide you more details if required. But try to do this, use this in a demo account to master it and be able to follow it accordingly. I wish you happy trading.